The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're getting ready to start the day right into the holiday atmosphere. We posted the chart for the DAX, and as you can see, after that bottom was formed, we made the double bottom, and then we've had the pretty strong rally here. From what we understand from Bloomberg, it is because of the fact that maybe Merkel has joined forces to maybe get her program working again. But, you know, that's just what's on there. Folks, I got two words for you today. Charlie Rose. That probably shocked me as much as anything. I was a big fan. I still am. I mean, you know, but my goodness, that really shocked me. Now, I've heard a rumor. Now, this is just a rumor, so don't repeat me. But there are 26 professional football teams with 70 players on each one. And there's a rumor that there is one person coming forward for a possible chat about abuse. I don't know if that could possibly be happening, but God only knows. Anyway, the culture is changing for sure, which is a good thing. Anyway, I'm off my soapbox, onto the markets. Next one we want to take a look at here is the FTSE. And then right after that, we need to chat about the natural gas, because it is fighting for its life, and I mean that on a very serious note. You'll notice here on this FTSE that we did have a little bit of a rally after the move down to 17,350. We rallied about 70 points, but it's in a pretty good downtrend compared to the all other markets in the world. Now let's take a quick look here at this. Hold on one second. Hold on. How do I get this up? There we go. Here's our natural gas. We want to take a look at this one here. We've been watching this quite a bit now because of the gap that exists back here in late October. We almost got to there today. We could still get there, but we're still trading right at this very critical 382 level of 303. Now, my assumption is if below $3, you don't want to touch this. But there's still a possibility that it could be very bullish. But again, it is beginning to look a little less and less likely. And part of that reason is if you look at this really closely, you'll notice the day that we had on Friday, we had that really strong market with a really strong close, and then what did we do on Monday? We gapped down sharply. That sets up a potential ABCD that would take you all the way down to the 292 level. So this one is not nearly as bullish as it could have been if we'd have held that 303 level. I know we're trading at 303.20, but we did go below it, and usually these numbers are pretty much spot on, so we'll have to wait and see. Yep, you're right. It's bullish for now, but anything below that 302.50 or 302 level would certainly set up a move down to 292. The real problem is that big gap up we had on Friday with the strong close. That was really bullish, and if it didn't follow through, that's something that you've got to really respect. That's something that I think you just can't. It's just price action, folks. I don't know anything about the fundamentals of this stuff. It's just it amazes me that I've been in this business so long, but I made the decision way back in 1974 to stop looking at the news and reading the Reuters and all the, looking at earnings and all that other stuff and reading the reports. Basically, my teacher, John Hill from Futures Truth, proved to me without a shadow of a doubt that the markets are the most bullish at the top and most bearish at the bottom. That's the way they have to be. If you remember Jesse Livermore's book, Reminiscences of a Stock Operator by Edwin Lefevre, he said, don't be afraid of high prices, son. They're there for a reason, and don't be afraid period of low prices, they're there for a reason. And that reason is they've got to switch from supply to demand, and that's how it usually happens. But wherever that time is, I'm not really sure, but that's all what we're paying attention to right now. Now I want to take a quick trip down memory lane here. This really brought back a lot of memories. This is a chart, folks, of the U.S. Federal Reserve interest rates. 1-year Treasury yield, and if you look back on October 22nd of 2008, we were at 1.62%, and look where we are now at 1.62%. That means rates have been rising, since 2015 when the bonds topped. Look at the increase, folks. We went from 0.25 to 1.5. That's about a 6-fold increase in interest rates, but you don't see that because it's so darn small. And that's the real key. And maybe this is just a good place to think rates are going to go a little bit lower, and they certainly could. There's no question about it. But this brought a lot of memories when I saw this chart, because when I first started with Drexel in February of '76, interest rates, were getting ready to go higher, and I inherited, there were about 12 accounts that Drexel had that were actively trading, semi-actively trading, and so I took those accounts, and I had to meet with each of the people, to understand what they wanted to do and all that stuff. And then it's a long story, but anyway, one of my favorite customers at Drexel was Maury. He was he owned a string of electronics stores all over California and Nevada and Arizona, and he was incredibly wealthy. But he had this tremendous idea that the T-bills were going to go up in value, and with interest rates dropping, or interest rates going up, that doesn't happen. And so after about 6 months of fighting it, he came in one day. He was down about $100,000, and that was like peanuts for him. But he came in with a check for $500,000, and he reversed all of his positions. In other words, he went from short to long, and the thing just, made him a lot of money over the next 3 years until interest rates, finally topped in 1982. I think it was August of '82 when they finally topped. But anyway, that's a story. Is if it don't go up, don't buy it, and if it doesn't go down, don't sell it. We've got a couple of things that are very interesting this morning, folks, from a pattern recognition standpoint, and one of them I think we have to pay particular attention to because it's beginning to look weaker and weaker and weaker, and that is this gold market. I wanted to show it to you for two reasons. You'll notice here that we had this big ABCD pattern from November 3rd up to the 9th, down into the 14th. It was a perfect ABC up there at 1298. That was as of Friday, folks. It had every chance to go through there, and when it couldn't go through there, that was one thing that I mentioned in the newsletter about both crude oil and the gold market. They had to continue. It was very important, for them to blast off and, start to extend these patterns, and they haven't done that, as of yet. Now, last night we had a little bit of a rally of about $6 up to 1280, and what are we doing now? We're coming right back down to the 1276 level, and it looks like we're going to attempt the either 1273. Breaking below 1273, folks, is going to set $50 lower, 1220, and that's what it's going to look like. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've been asked to discuss the gold chart that I posted. What I've done now is post the daily chart, and what I would like for you to see is to look how bullish it looked as Friday. You'll notice that we closed right near that 1295 level. Folks, in a matter of about, 22 hours, the market gave back $22, got all the way back to 1274, which was right at that bottom at the 78.6. We're trading around 1279 right now. It still does look okay. It could still go higher. But the thing that bothers me the most is the fact that there are two things that are holding this market back. One happens to be the silver move. Let me show you what happened in silver. You had a beautiful breakout of the channel on Friday, the pennant that was there, closed really good, had every opportunity to keep on going. And what does it do? It gave all of last week's gains back in a matter of a few hours. That is usually not bullish action, folks. The second thing that is, I think, relatively important here that we should remind ourselves, in the last 3 years, the month of December, right near the end, like we were in 2015 and 2016, we saw two major cycle bottoms coming in December. So there's an aspect of seasonality here that looks interesting. But the fact that that gold gave $22 back in a matter of a very short period of time is not a good sign. That's just a technical picture. Now, if it gets above the 1294, then it'll look. Hey, folks, I'm long gold. I've got to stop at the 1273 level, but I'm long gold too. But it's not acting nicely. Just because it doesn't act nicely doesn't mean it doesn't want to go up. But we'll have to wait and see. But that's what I see. The silver has faked it out. It might fake out again. I don't know. But the other thing is the fact that we've got those big targets down there, if you remember, at 1220 in the gold and 1200 on the long-term weekly charts that we've looked at. that's the thing. Now, remember, yeah, you're making a good point here. I'm switching time frames. I'm looking at a daily, a weekly, and then going down to the, hourly chart. They are different. And you use that hourly chart because you can trade $120,000 contract, for about $500, which is pretty good. So that's why you want to protect yourself. The only thing wrong with the gold is the fact that it, came down so fast. If it had only made a 382 retracement coming into this morning, I would be wildly bullish. But it's not doing that. So, and I don't understand the fundamentals. I'm just telling you that that's what I see. And we're seeing the same type of action in the XAU too, which is another reason why you have to pay pretty close attention to it. So those are one of the things, several of the things that I'm looking at with the gold and silver to tell us whether we're going to make a big turn here or not. So we do have one pattern here. This would be the crazy man's trade because let's put this up here because this is where we were just about an hour or so ago. We went about another 10 points higher in the Dow, but we're completing an ABCD pattern here at 23,500 and we're 23,512 right now. So that pattern is completing. The problem with this pattern is that you're fighting the most strongest of all statistics in the market, folks. In the last 20 years, I think we've had the market has closed higher the day before Thanksgiving and the day after Thanksgiving about every time. But it didn't go very much last year. If you noticed, last year we went one day higher, the day after Thanksgiving, and then boom, we got hit with a correction, not a big one, but it was a correction of about 7 or 8 days. But these are statistics that are really, really setting in to that level. But that is an ABCD pattern. We have a Gartley pattern in the what do you call that thing? The NASDAQ. So that's a little bit different, and we'll watch that one as we'll scroll through here. I've had a request to talk about copper. And so this is one that we were watching last week. It's acted just absolutely beautiful. Our good friend Mr. Z in the room was talking about buying copper at 303. We're now trading around 312. If you'll notice that we have this price objective coming in at around 317, which is going to be very, very important. And the reason why it's going to be important is it's going to match the high from August 28th, which was our lunar eclipse. And that would also be a perfectly symmetrical head and shoulders pattern if that comes in right about November the 28th. So that would be next, 7 days from the day, be a week from today on Tuesday. So keep an eye. We got to watch copper here because if we're not above that 317, come the 28th, that's going to be a perfectly symmetrical head and shoulders pattern where the left shoulder and the right shoulder are equal. They're the same price. They were trading at 318, back in August. And if we're around that 318 again, you'll notice that's right at 317 and a half would be the 61% retracement. And it would be from high, from shoulder to head to shoulder would be perfectly symmetrical. So that'll be one that would really, set up a perfect, scenario. Now, these patterns that we're looking at, these head and shoulders patterns, were done by, Dr. Andrew Lowe in his book, The Non-Random Walk Down Wall Street, and they quantified all these things. They went through and looked at the structure of these patterns and how they fit together. They did it with such incredible formulas that were way beyond my pay grade, I can tell you that. But it did prove that these things do give you a pretty good idea of what's happening in the market. And the second thing is that they do repeat. And both of those things you can use when you're looking, to try to enter a trade, and that's what we're looking at here when we watch some of these things. So we're watching copper with a great deal of interest right here. And another one that we're going to be talking about, I'm really interested about these interest rates because it's quite important because that's what makes our Federal Reserve work the way it does. But since we have a question. Hold on just a second. Someone's asking a question. What percent of the time do head and shoulders work in what markets? All the markets that are active and liquid, they all work the same. None of the markets are different. The reason why you can prove that to yourself, P, is because all you have to do is take off the price and take off the date and whatever the thing is, and you can't tell which chart is which. all charts are the same. That's undisputable. But they works on any of them. The probability runs about 70% on Head and Shoulders patterns. I believe that's the number. It was in the book. I haven't looked at it in a long time because it's wow, I can't believe that book is 14 years old already. But we have a request to take a look at Twitter, and we'll bring this up here, and we'll see that Twitter has had some really nice patterns. You'll notice back here in September when it was going to be bought out, which was a total scam. You notice the ABCD pattern that came into this level here. And now what we're doing now is we're rallying back to a 61% retracement from the October high. Remember, folks, we are in a holiday atmosphere in stocks. It starts getting slow today, and it gets really slow tomorrow. No trading on Thursday and a half a day on Friday, so the volatility can get really, really wacky. Especially the day after Thanksgiving. And then anyway, well, we're closed here at TFNN during that time, so we'll watch that as we look along. We've had a question about the crude oil, folks. The crude oil is holding its own. It really is. It's actually acting relatively well. Let's just put up the daily chart because I talked about this yesterday. We've got up to, got to take a break, and we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Mr. Z from Philly. John, how are you? And happy holidays to you, my friend.
And happy Thanksgiving to you and your clan. And I'm looking for clairvoyance, sir. I'm looking to hear whether bonds are going to 156 or 151.
I can help you on that, John. Write this number down, okay? 555-5555. And if there's no answer, just keep dialing. My friend, I wish I knew. And I posted the chart in there of long-term rates, since 2008 that rates have been going higher. What we're looking at right now in Treasury bonds, I'm going to post this up because we're approaching this real critical level of 155, which is going to take out the high of the 8th. Longer term, John, this looks, still very bearish, but there's still a possibility that if the market would really start to accelerate for some reason, maybe a flight to quality if something crazy would happen, we could get up to the 162, 163 level, but that's nothing more, than a 61% retracement from the high that we made back in 177. I just don't see how anyone can be bullish on, the bonds, given the fact that what that chart looks like, and I'll post that. Here you'll be able to see this chart. You'll show the 156 that I'm looking at right now. This is what I think we're going to be hitting here. We're trading at 154.09 right now, and you'll notice, John, at that spot we have a beautiful Gartley forming, and it's also a head and shoulders pattern. And but that comes in at 156.20. That's about 2 handles from where we are right now. But anything above that, then you could be looking, at the 163 level. But boy, I think it's going to have some trouble. It might not even get above 154.20. I'm not even sure of that.
Yeah, I will just update you. I know you, when you are doing your show, acting in the tiger's den, you are not looking at the trading platform with live prices. The ZBZ just actually got up to 154.21 just now. So we're right back up to the high of 2 weeks ago. And I observed the FIP, and I'm just doing on the ZBZ 7 contract, the FIP 786 is 155.08. So question for you. If we get up and test and just exceed 154.26, that's a high of 2 weeks ago. If we get up there, which is not much higher, I mean literally 830 seconds or so, could you short it there with a stop just over that FIP 618? Would that be a trade that would make sense to you?
Yeah, if you're a good tape reader, and so watch to see how the stops are. If you get above the 154, 20 level, which it looks like we're going to, but if I had my druthers, which I don't have, but that would also be a 20-man line coming in there at that 618 at nearly the 155.03 level. So I think I'd have to wait on that. But using, if there's no buy stops there, John, you can certainly do that with about a 7-tick or $200 stop on the bonds. I don't think there's anything wrong with that, but I think the safer trade would be to see if they're going to get up to this 156 and change. The reason why I believe that is look how it came down so quickly from that level and stopped exactly at the 61% retracement at 152. We pointed this out last Thursday when it happened. No, it was last Monday when it happened, and ever since that time, it's been a bullish bias. So that's what it looks like to me as we're heading a little bit higher in these bonds. That's just short term, though. Longer term, we're going to look at higher rates. That first chart that I posted, that shows you that we've had a 7-fold increase in interest rates over the past 3 years, but they're so small, nobody pays attention to them.
That is true. And thanks very much for sharing. Just the last thing I wanted to share with you and your listeners, just on the COMEX Gold futures. We had, as you well documented, Friday and Monday, we had a nice surge Friday going over highs, and open interest expanded close to 30,000 contracts. And then, of course, we gave it all back Monday. I will share this with you. The COMEX Gold futures market ceased being a bullion delivery market years ago. When you get into the delivery window, which starts December 1st for that December futures contract, yes, there are deliveries. In other words, yes, bullion is exchanged for holders of the futures contracts who are long and put up all the capital to take delivery, but it is truly just a delivery market between the big bullion banks, and that would be HSBC, JP Morgan, Scotia Mercado, what have you. No retail buyers go to the warehouses and pick up their gold that way anymore, and that's been a feature for 5-10 years. And if you look back the past 6 years, each year gold has declined in the month of November into the window of time comprised of the expiration of the December COMEX gold futures options and then the beginning of delivery. And what you have going on here, as I see it, is that rally Friday, right up under 1,300, got right to the point where you have futures, call options with lots of open interest at strike prices at 1,300 and above. And what happens is if you were a big bullion bank and you had been short selling the call options, hoping that they would expire at zero to take maximum profit, if gold futures rallied past 1,300, you'd start taking big losses. Well, by whatever mechanism exists, gold was repelled up there, come back down, and all those call options with strikes above 1,300 are now trading effectively at zero, and those expire Monday at 1:30. And coincidentally, the past 6 years, lows have occurred between November 28th and December 10th. I can't help but, well, let's put it this way. I'm not making any prediction, no forecast, but I am very much keeping an eye on the action in gold futures and the potential for bottoming right in that time window for the 6th consecutive year. So we'll see what that gives us.
Well, by the way, you were spot on buying at that 78% level today in the gold, because we came right down to that 1276 and we rallied, $6, very, very quickly. So that's another positive sign. All we need to do to get gold really bullish is to get it above 1,300. I think we'll do that, but whether we're going to do it till after the first of the year or not, I'm not really sure, but that's what it looks like from the charts. But you're right about that seasonal. That December area the last 3 years has been pretty, really close, and whether it gets down there one more time or not, I'm not sure.
And I do want to just say in parting, thanks a bunch for having those conversations, both with Rich Anderson last week and John Jameson. Those are always very informative, and I appreciate that greatly.
I do too. I enjoy having them as my friends just because I like them a lot, but also they got a great deal of information and a whole lot of context. So contact's what really makes it great.
Terrific. Hey, happy Thanksgiving to you and your listeners.
You bet. Thanks a lot, John. Mr. Z from Philly calling in about the gold market, and we'll see how that goes. We're trading around 1281. We'll take a little break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. I wanted to share a very unusual chart with you here. The reason why, I'll tell you in just a second. This is the chart of Softy, Microsoft. You'll notice that we had a top a couple of weeks ago up at the 86 level. We're trading at 83 and change right now. The reason why I bracketed that is because that is possibly one of the most bearish patterns that you'll ever see on a chart. And the reason why is I learned this from my good friend John Hill at Futures Truth. It's a very rare pattern. You don't see it, but it's called the 98% rule. In other words, if you gap down here sometime between, well, whenever it happens to gap down and leaves that gap, that tells you that that is a major top, and you're going to be looking at something, you know, really, really sinister, and the risk reward on this would be huge. So you really want to watch the gap if we get it at 82.50 in the Microsoft. And remember, it's only a point away, so that's not very much. I have a big oil painting behind my desk here in Tucson. 4x4 oil painting, and it depicts these different patterns, and this happens to be one of them that John pointed out to me. And it was also in his book that he wrote about the futures market, Commodity Trend Analysis, that he wrote in 1966, where he even showed the ABCD pattern that Gartley had talked about on page 222. So that's an interesting thing to keep in mind. But also watch this pattern. I keep it on my watch list. I have the limit minders going, because if it does happen, it's going to be very, very rare, and it would have a tremendous amount of profitability. Plus, the fact is the amount that you have to risk is extremely small. I mean, it is extremely small. So we want to watch that one as we watch this. We just made new highs now in the, I believe we did. Let's see that. Yeah, I think we did make new highs in the. Yes, we sure did. We made new highs in the S&P. We haven't quite made it yet in the we're 20 points away in the Dow, and I believe we made it in the NASDAQ too, but I'm not 100% sure. Let me double check it here. I believe we have. Yes, we blasted through those too. So we've made new highs in just about all of these things. So we'll keep a close eye on what happens today. This is the 2 days before we have the what do you call it? The Thanksgiving holiday. Of course, tomorrow is a smaller day, but it has it is the single most bullish day of closing up That's what it means. In other words, it will close higher than it did today. So whatever the close is today, whether it's 25.49 or 25.95 in the S&P, it would still close higher the day before Thanksgiving and also the day after Thanksgiving, which is shorter trending day. Then after that, the statistics, go back to normal, and then you'll have a pretty good idea of what we're watching on some of these things. But we're only 20 points away, well, less than 20 points away in the Dow now, with a lot of enthusiasm coming into the market. So we'll have to wait and see, how much higher it's going to get here early in the morning. Remember, the first hour is known as amateur hour for a good reason. So I don't like chasing markets, but sometimes they deserve to be chased, as they say in the trade. So we'll watch this really closely here as we're moving on. We did make new highs, of course, in the Nasdaq. We've made them in just about it. We haven't made them in the Russell yet, but we're very close. And we're really getting close now in the Dow Jones. We're up 146. We needed to get above 23,550, I believe, is the number. And then would be, spot on looking at that. There is a 1.618 number in the long-term chart of the Dow E-mini that comes in at 25.98. We're only 2.5 points away from that. So that'll be an interesting one too. But we are making new highs on all of these. And like Livermore said, don't be afraid of high prices. They're there for a reason. So things are looking good. Maybe the picture of the let's just double check the we're actually a little bit farther away. We're only 13 points away in the Dow Jones for taking out the new high. So we'll see how that one holds up too. The bonds we've got up. We did take out that number that Mr. Z talked about at the 154.21 level. We're trading at 154.18. The ABCD structure on this measures to 154.30. I don't see any reason why it wouldn't get there. We've taken it out. We haven't shown. We're only 2 pips off the high, so it's showing no reason to think that was going to be any different, than anything else. So let's just watch that to see what happens. It looks like the bonds are going to get up to that close to that 155 level without too much trouble at all. So we'll watch that very closely. The crude oil, folks, is still holding really nicely. Yesterday's low, I think I have the chart for that crude oil. Here it is. I have it right here. We can bring it up and take a look at it. You'll notice here that yesterday's low was really spot on. You'll notice we hit the 61% retracement of the low we made back on the 14th. All we did last night after making the high was come down to a 382 retracement. So this still appears that it has legs to go a little bit higher. And I don't see any reason, to think that it is. In fact, other than the grain markets and stuff, it looks like it's, pretty bullish everywhere. Now, we had questions about the wheat market. Folks, once March wheat went below once March wheat went below the 435 level, that really negated the ABCD structure that we had been watching, because I think I can do this without any trouble at all, because this was something that we were really following very, very closely here. I think it's right on the bottom. Yep, there it is. Let's get this up here, and you'll see here. This is December wheat, but and it's still trading in December, so it's not a problem. This equates to 420, and that's where we're trading now in December wheat. You notice that's a breakdown, folks. That tells you that this target that we're looking at is most probably not going to happen now. Because the market, turned around, and if it gets below the 420, and I believe we're trading below there right now, that's you just can't stand in front of it. That's the bottom line. That's the main thing. If you want to buy something, take a look at sugar. Look, we were looking to see sugar back off after Friday, and all it's done is pull right back down to a perfect retracement there at this 1480 level, and that's you want to buy something, it's in an uptrend. You've got higher bottoms and higher tops, so look at sugar if you want to buy something. But wheat is not the one to look at. You're right, P. It's way below the support now. You can't mess with it. At least that's the way I would look at it. That's pretty much the bottom line. So we'll watch how it figures out. But That's about it. We're still 10 points away from the Dow making a new high. We've already made new highs in the NASDAQ. We've made new highs in the S&P 500, and that's about it. Let me see. The crude oil's trading at 56.68. I still think we're heading higher in the crude oil. I still think we're heading higher in the bonds. The gold is a toss-up. We really need to get gold above that 12.95 level. If you bought the gold the other day when we talked about it, down around that 12.74 level, put your stop at break even. That's the only way you can handle it actually is to do that. And so I would suggest that would be the thing to do if you're in the gold market. But that's also still in an uptrend. The problem with the gold is what we discussed with Mr. Z from Philly is the fact that there's a really strong seasonal for gold to bottom in December. Maybe it's bottoming early. Maybe it bottomed in early November this year. These things do shift back and forth, so we'll watch it closely. So 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to post a chart from a day or so ago, but we're right back to 23,565 in the Dow Jones right now. The old high was 23,602. We haven't quite taken it out in the Dow Jones contract itself for the E-mini or the cash market, which is the Dow itself, but it's still early. We've only been trading for 25 minutes, well, not counting the overall the weekend that we're looking at. Also, the VIX index is going to be under a great deal of pressure. It looks like we're going to be heading down to possibly test another double bottom. We were down near the 78% level yesterday, so it looks like we're going to be heading down to about $9 in the VIX index also. So we'll watch that. One of the interesting, well, there's so many interesting things from Basil's show yesterday, but when he talked about the way that people talk about things at Thanksgiving and other things, what is the subject matter, of the day, and it certainly isn't stocks anymore. It used to be, but there are so many other things in the news that it makes it very, very interesting, to pay close attention to it. But anyway, that's what we're watching here this morning. We've got a whole bunch of things coming up that'll be really exciting right after the holidays. But tomorrow will be a very, very low day because it's a half a day of trade. A full day, half a day of trading tomorrow, and I believe a half a day of trading on Friday, as I recall. It's a very, very short week. In fact, they would close, except that the Federal Reserve, our Constitution says we can't be closed 4 days in a row for the banking system. The only time we've had that happen in the last 100 years was World War II, and then also during 9/11 we were closed for 8 days. Because of the problem with the terrorist attacks and stuff. So it will be a little bit wilder, but remember, wild markets can happen when you have less liquidity, and that's what happens on these days, especially the day after Thanksgiving. That can be a really fun trading day. I try not to miss that day, even though it's a shorter term. We'll see. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!